where do you stand now on the risk of no deal and how that impacts the pound?
Well, it's got to be significant. Given that both of the contenders left for the Tory leadership have had to harden their positions with respect to Brexit because of the success of the Brexit Party really in the European elections, it's got to be a significant probability. Now, of course, there is the counter-argument that surely Parliament, who of course doesn't want a no-deal Brexit, surely they would stop that. But again, we get to the question, certainly raised by Boris Johnson, that he could prevent Parliament from preventing a no-deal. So there has to be a realistic probability. But of course, again, it's very, very difficult to predict. We know that if there is a general election, then the risk of a Brexit at all does decline. So there are so many different permutations and combinations. But certainly, UK businesses do have to take into consideration a very significant risk of a no-deal Brexit.
Oh, Jane, probably part of your job is to take what is factual, and factual is about rates. Mark Carney has intimated he might even need to raise rates in the event of a hard Brexit. My question to you is, I mean, I don't know whether there's going to be a hard Brexit or raising rates. Nobody knows. But surely the bar is very high to possibly raising rates, but that would be about defending the currency. How low is the bar to more QE on a hard Brexit?
Well, again,
excuse me.
Yeah, again, if a hard Brexit happens, then there is the risk of a fairly chaotic impact for the UK economy, and certainly the first reaction to that would be yes, well, the Bank of England would have to do more. And actually, last week, Carney did indicate that he could cut interest rates on that outcome. Quantitative easing, well, we're talking about quantitative easing now in countries like Australia. So if we do get a significant global slowdown, then surely that would raise the prospect of that happening in the UK too. But perhaps it's too early, I think, to speculate on that at this minute. Now, in terms of an interest rate hike, well, the Bank of England still have officially in its forward guidance that the risk that interest rates could go in either direction. And I think if interest rates were to go up, what we'd have to see as a prerequisite to that is a move higher in inflation expectations in the UK. So we would have inflation going higher, assuming sterling were to drop. The bank could potentially look through that as long as inflation expectations didn't move. But if they did move higher, I think that's when the risk of a hike would come through.